Welcome to the Stock Option Assassins free trade of the week. My name is Eric and today is Monday, May 18th, 2015. And this week's edition of Trade of the Week, we're going to take a look at the 52-week high on the SPY that was made today. And we're going to look at a catch-up option play that could double in Bank of America. And if you haven't done so already, be sure to subscribe to our YouTube channel for more technical analysis, videos, and strategies. And let's go ahead and dive into the charts here. We're going to take a look at the SPY. We did hit a new 52-week closing high here. So this is relatively significant. If I zoom back out a little bit, you can see we've been in this huge range really since, the beginning of the year. About February, we kind of peaked out and then we kind of pulled back. We've just been kind of chopping around and it's been kind of coiling up here and we finally sort of broke out here. For the bulls, what we would want to see tomorrow is a close above today's high, or at least maintain this previous resistance, which should be support. If we can stay above this, then I think we can start looking at some higher targets here. So I don't want to, I want to say that I think we need a little bit of confirmation, but right now it's looking good for the bulls. So I want to look at two things here. So first, I want to look at a what would a one-to-one move look like? And where can the S&P actually go from here? So let's take a look at a trend. This is the low from February when we made this huge run, right? So what I'm going to do is I'm going to duplicate this line, right? And I'm going to move that up to this past dip, which was in early March. So if I zoom out a little bit, you can see that a one-to-one move of the last leg up, we pulled back. It finally kind of broke out. A one-to-one move is going to put us about 218.57. I'm going to call it 219 right now. I think that this is a logical level that the S&P could go. Given the amount of consolidation we've had, I think that we can make a one-to-one move relatively easy. It's not going to be straight up. We're going to, I think we break out, pull back, and we'll kind of see. So as far as a place where we could pull back to, I'm going to add a Fibonacci retracement from that same February low to the February high, and you can see there's a 27 extension here about 216 and a 618 extension about 221. So I'm not sure if we get to the 618 yet, but typically when you have this kind of breakout that we're seeing, there's about a 70% chance you're going to get to the 27 extension, which is again about 216. My guess is over the next week or so, we rally back up, we do a pullback, and then we can see if the bulls can get us to 219. So with the idea that the market is starting to break out here, what I want to look at is a potential catch-up play. So real quick, I want to look at the financial ETF, the XLF, and it's starting to sort of break its recent resistance, which has kind of been around this sort of area. We'll call it 24.75, and it's starting to sort of clear that. And I think that the XLF should be able to pretty easily retest the recent highs from December of last year. So with the idea that financials are kind of doing well here, you have names like Goldman Sachs, who have already cleared those levels. You have JP Morgan, who's already clearing those levels. And what I'm looking at as a potential play as soon as tomorrow is Bank of America. You can see Bank of America is nowhere near its December's high. So it doesn't mean that Bank of America is going to get there just as fast as the other ones did, but it does mean that I think there's some upside here that we can sort of tap into. So what I'm looking at putting on is buying some slightly out of the money June Bank of America calls with the idea that if the market can continue higher here, I think Bank of America could actually move up to at least 1750. I think that's a reasonable level. You can also see that this is where the real sort of flush of BAC went down, was right here around 1738. So a couple short-term technical things are Bank of America has been kind of putting in this little bit of a bull flag / wedgie thing, and our DMI oscillator is near zero. We're a little bit slightly oversold here, so if we can get a tick up on the DMI stochastic extreme and we get a little bit of tick up here, that would probably push us out of this bull flag and get us on our way to 1750, possibly 18 if we can really get moving there. So let's look at the option chain and see how we would want to play this. So June options, we have 32 days out. I want you to look at something too. I'm not really going to mess around. You can see where the open interest is. I'm not going to mess around with these $half strikes on Bank of America. I'm looking at either the 16 calls, right? The June 16 calls or the 17 calls. And I want to just kind of compare these. The deltas are hugely different here. So we have, if you go out, out of the money, you're going to end up with a delta 27, which is, not as probable because you really need that stock to move. If you go with slightly in the money, you're going to end up with a delta 73. So you have a little bit of intrinsic value there. So that's actually probably the better play. And let's take a quick look at theoretical price. What would that look like if we got to move to 1750? So right now, first of all, Bank of America is trading for 1650. So let's bring this down here to, I'm going to bring in theoretical price, right? Let me reset this. So today's 518. So I'm going to fast forward about 2 weeks, maybe 3 weeks to June 5th, right? So if Bank of America were to go up by $1, these June 16 calls would approximately go to from 63, 64 cents to about $1.50. So if Bank of America can play catch up with the rest of the financials, the bigger names, then you're looking at potential 100% gain in the next 2 weeks by looking at the June 16 calls on Bank of America. That's all I got for this video. We'll see you at the next update.